Hello, and welcome to the Acuity Commodities Podcast. I'm Fiona Boyd, U.S. Director, and I am joined by Senior Market Analyst Justin Mize. Thanks for joining us. We're recording this on Friday, March 13th. Tomorrow is going to mark 2 weeks since the start of the conflict in the Middle East. It's been challenging. Every day we wake up and there's a new question, new issue, new development. It's very fast moving, and we're just, doing our best to bring the clarity that we can to our readers and subscribers. So today we're going to cover a few major developments shaping the global sulfur and sulphuric acid markets, with a particular focus on the Middle East conflict and its impacts on sulfur production and export flows through the Persian Gulf and Strait of Hormuz. And after that, we'll shift into another theme that we have been spending a lot of time analyzing recently: the growing role of critical minerals development in driving chemical demand across the U.S. and Canada. And finally, we'll touch on a few upcoming industry events where the Acuity team will be traveling over the next few weeks. So starting with the global sulfur market, prices just before the start of the war in Iran were under downward pressure, largely because of slow demand on operational issues and the Lunar New Year holiday period. Today, prices are much higher, but liquidity remains thin due to logistical disruptions, limited spot supply, and buyer hesitancy, mainly because of affordability. There has been some upward movement, however. In China, which remains the world's largest global sulfur import market, spot purchases have recently been reported as high as $555 per ton CFR, reflecting the tight supply environment we're seeing across Asia. India and Indonesia are showing similar pricing levels, with spot cargoes assessed around $560 per ton CFR, while Middle East export prices have moved into the $510 to $520 per ton range. The lack of liquidity and uncertainty has resulted in some of the market shifting towards formula or index pricing, which has made price discovery difficult during these periods of volatility. We're also seeing freight costs increase sharply. For example, freight from the Middle East to China has recently moved up to as high as $50 a ton from as low as $27 in early March. So the market right now is dealing with a combination of tight physical availability, rising freight costs, and increasingly cautious buyer behavior. But the biggest driver of uncertainty, and really the issue dominating the market conversations right now, is the conflict in the Middle East and its impact on shipping through the Strait of Hormuz. The Persian Gulf is the most important sulfur export region in the world, supplying volumes to markets across Asia, Africa, and the Americas. Acuity's data indicates that global sulfur trade last year was around 30 million tons, and supply out of the West Asia region accounted for around 56% of global trade. Countries like Saudi, Qatar, Kuwait, and the UAE export large quantities of sulfur as byproduct of refining and natural gas processing. And most of those cargoes normally transit through the Strait of Hormuz. Since the escalation of the conflict involving Iran, the biggest impact so far has been on logistics rather than production. Traffic through the strait has slowed dramatically as shipping companies impose restrictions and insurers withdraw war risk coverage for vessels operating in the region. In practical terms, this means very few vessels are currently willing to transit the strait, leaving cargoes stranded and creating severe uncertainty for buyers. Market participants report that shipping lanes in and out of the Gulf have effectively stalled, and only a handful of cargoes have been able to move through the strait since hostilities escalated. Even though some governments have indicated that naval escorts could potentially support tanker traffic through the region, it remains unclear whether commercial shipping companies will resume normal transit levels in the near term. The immediate consequence has been severely constrained sulfur supply out of the Middle East, which is one of the main reasons that sulfur prices are on the uptick. Buyers in countries such as China, India, Indonesia, and parts of Africa, which rely heavily on Middle East sulfur supply, are now actively seeking cargoes from alternative sources, including North America, the Baltic region, and any other export markets. But replacing Gulf volumes is not easy in the short term, given the scale of exports that typically pass through the strait. And that's why the sulfur market is particularly sensitive to developments in this region because a disruption to Middle East exports doesn't just tighten supply locally, it reverberates across the entire global sulfur and sulfuric acid markets. If these logistics disruptions persist, we could see continued volatility in sulfur pricing and potentially tighter sulfuric acid markets as downstream producers adjust to the reduced availability of feedstock.
Yes, thanks for that insight, Fiona. And while geopolitical risks are threatening sulfur supply, we're also seeing new structural sources of sulfur demand emerging, particularly in the metals sector. And one of the most significant examples continues to be the expansion of nickel processing capacity in Indonesia, which has really become a major driver of sulfur and sulfuric acid demand over the past several years.
Yeah, it's amazing to think that in 2023, Indonesia imported just 2.6 million tons of sulfur, and that went to over 5 million tons last year. So a growth of 2.7 million tons in just a 2-year period. And that is really a key driver for sulfur price growth that we've seen since early last year. So we were already kind of in an elevated price environment going into before the conflict in the Middle East began. And it seems like there's even more demand on the horizon in Indonesia, right, Justin?
That's exactly right. A key development to watch here will be the Pamala HPAL nickel project, which is expected to begin commissioning in the third quarter of 2026, which is up from its previous expectation being in the fourth quarter of 26. So projects like Pamala use high-pressure acid leaching technology, and that requires large volumes of sulfuric acid to process nickel ores. And much of that acid requirement will typically be produced internally through sulfur-based sulfuric acid production. And that means a meaningful sulfur pull. So as Fiona mentioned, that's something that we're just continuing to see in the region. And at steady state, projects of this scale can translate into hundreds of thousands of tons of incremental sulfur demand annually. And our estimates suggest that Pamala alone could represent around 800,000 tons per year of additional sulfur consumption once it's fully operational and ramped up. And that's a meaningful increase in the demand and reinforces the role of the nickel sector as a growing consumer for sulfur in Indonesia especially.
Yeah, and I want to highlight that we're seeing increased competition to secure sulfur between the metals and fertilizer sectors, particularly with the demand in Indonesia growing. So this is providing price support, although affordability is being tested more so in the fertilizer sector.
Yes, and another trend we've been closely monitoring is the development of critical minerals projects in North America, which is creating sources of demand for industrial chemicals. And at Acuity Commodities, we track this through our Insight US and Canada Battery and Mining Projects database, which monitors over 100 projects in the region and grows every quarter as we're adding projects to the Rolodex. And these are particularly important because many of them rely on reagents, including sulfur, sulfuric acid, caustic soda, hydrochloric acid, soda ash, and many others. So, for example, copper leaching operations require large volumes of sulfuric acid, and we've seen 2 new copper operations come online in Arizona recently, one being in the second half of 2025 and another one in the current quarter. And lithium extraction and refining projects can also require meaningful amounts of reagents, particularly hydrochloric acid and caustic soda, and for the conversion processes, mostly soda ash. And rare earth processing has become much more prominent, especially lately in the U.S. policy standpoint, which we'll get into a bit more later. But these projects are continuing to move forward and creating an entirely new demand base for industrial chemicals across the U.S. and Canada. So for those major chemical producers and marketers, this is a growing set of opportunity to really engage with new buyers at an early point. And at Acuity, we track all of these developments closely and provide the latest project level insights so market participants can identify where future demand for reagents like sulphuric acid, caustic soda, and others is likely to emerge.
And one of the reasons this sector has gained so much momentum over the past year is increasing government policy support for domestic critical minerals, right?
That's right. In the U.S., we've seen several initiatives to accelerate project development, and an example would be the Fast 41 permitting, which is designed to streamline the federal permitting timelines for major infrastructure and mining projects.
And there's an example of that with the Korea Zinc Project Crucible in Tennessee. That's essentially the replacement of the Near Star Clarksville smelter. And that's a project that's being, fast-tracked under Fast 41, right?
That's right. That one, and along with many, many others, have seen, increased activity and a better timeline and outlay towards their permitting progress. But at the same time, you've seen the U.S. government being more involved in supporting the domestic supply chains through mechanisms like the Department of Defense funding, loan programs, and even strategic investment partnerships, which was the case for Lithium Americas.
Right. We saw the government actually take an ownership stake in that project, which was pretty interesting.
Right. And so I think you're starting to see the U.S. policy changes emerging, especially at such a critical point when we're kind of ramping up defense spending, and it's becoming ever more critical for the U.S. to emerge as its own kind of supplier for these critical minerals, especially for those defense end uses. And that's the case because processing capacity for a lot of these minerals is heavily concentrated in China. Mm-hmm. So to diversify away from that will be a concern of the U.S. policies moving forward, or at least that's what we've seen so far.
And Canada's making similar moves?
Yes, Canada doing very similar things as well for its critical mineral strategy, including funding programs, tax incentives, provincial support for projects tied to battery making, electric vehicle supply chains as well. So taken together, both of these countries are instating policies to accelerate the investment in new mining and processing facilities. And from a chemical perspective, that really means incremental growth of demand for these projects, especially over the coming decade.
Oh, awesome. Well, thanks. So obviously, from emerging demand in North America, as the batteries and mining continues to evolve and the global events, there's clearly a lot going on. But before we wrap up, just wanted to also mention some of the upcoming industry events the Acuity team will be attending.
Yes, first we'll be at the Chlorine Institute annual meeting, and we will be there on March 24th and 25th at a table. This meeting typically brings together a lot of the chlor-alkali industry, and it's a great opportunity to discuss the industry developments, especially lately. And I will be joined there with my colleague Leslie Pastrana and stop by our table to say hi.
And following that, you and I are going to the AFBM International Petrochemical Conference in San Antonio at the end of the month. Here, our meetings are typically more about sulfur, sulphuric acid, and other industrial chemical commodities. Things really crank up in April when I will be speaking at the Sulphuric Acid Today conference in Orlando, visiting Santiago after CESCO Week, and attending the TSI World Symposium. Meanwhile, our UK director, Freda Gordon, will be presenting at an industry conference in China. And I would be remiss to say that in April, we will also be celebrating Acuity's 10-year anniversary. So thanks to all our supporters for your encouragement over the past decade.
Absolutely. That will certainly be an exciting time for the 10-year. So if you're planning to attend any of these events and you'd like to meet with us, please reach out. You could email us at info@acuitycommodities.com, and we'll be sure to get back to you.
And finally, looking ahead to next month's episode, we'll be joined by Freda following her upcoming travel to Asia. She'll be meeting with a number of major sulfur and sulphuric acid market participants during that trip. So we're looking forward to discussing her insights on global trade flows and market conditions across the region.
Yeah. Well, thanks again for listening to another Acuity Commodities podcast. And for more insights on sulfur, sulphuric acid, and industrial chemical markets, you can visit acuitycommodities.com. And thanks again. We'll see you next time.